Okay. Number what? Number 4, right? Let's go. Number 4. Say fire. Let's use what? Imbalance. Right? Look here. 1, 2. Sure? I told you guys imbalance abi? Sure? Imbalance abi? I told you guys abi? These are imbalance forms. First candle, right? Second candle, right? And what? Third what? Candle. So it occurs between 3 candles. 1, 2, 3. Sure? The gap between the first candle's eye. Sure? The gap between the first candle's eye and the third candle what? Low. This space here is the what? Imbalance. Right? Or FVG. Right? I will say that the imbalance that we focus on is the one that is at the 61.8% to 80% of the what? Fibonacci what? 2. So an imbalance that occurs here, we no go take that one. If it occurs here, we no take that one. Until it occurs at this discount what? Zone, right? Abi higher what? Higher what? Higher what? Higher what? Good. It broke this previous high, abi? So it is the imbalance that is at this discount zone that what pay attention to, right? So if you have not watched or not in the class where we taught imbalance is intensively, you go and watch the video, right? And so imbalance now, let's mark it like this imbalance now, let's mark it here. Sure? Any imbalance that occurs at the premium zone, we don't take it, abi? Just only at the what? Discount what? Zone. So imbalance. AVG, right? Okay. So once you have marked out the imbalance, you will have to wait for the market to come down to the imbalance or zone, right? So now let's go to the lower time frame so that we can enter in that zone. Abi, you have to wait for it to come here before it shoots up, right? So now we are in the lower time frame. Lower time frame, H1 15 minutes what? 5 minutes. Sure? Look me up. It's same thing. Same what? Same thing. Same thing. I don't want to bore you guys with a double button, triple button. Those is not too much theoretical something. That's why I'm using this approach. So look, there's triple button. All those triple button, all those things, they use this principle too. You understand? And so they don't need to tell you triple button. They play your head too much with those many things. Do you get? So they follow the principle because if that triple button not break that lower eye, change to if you go enter that one, you will collect. If that triple button, see triple button here, let me show you guys. This is double button. This is triple button. That's 1, 2, 3. It touched the zone 3 times. Inside the zone now. It formed this inside the zone. Like now. Let me just say it now. There is double button which is 1, 2. Triple button 1, 2, 3. If this double button now forms inside this pattern, inside this zone now, some people will buy because of this thing that formed inside this zone. If this triple button now formed inside this zone, some people will buy. But over the time, I've with experience, I've come to realize that if this double button now not break this previous zone like this now, if no break am, it If you go enter like here now, because the law is that you enter at the neckline, you enter here now, and this no break up, it means it's still following the downtrend. It will still come down. So if you come enter now, you still collect. So the most powerful thing is that it breaks this previous lower high. That's the most powerful thing. That's why so there's no telling you those many things to break your head. I will tell you the main thing. Do you get? The main thing is that to break what? The previous lower high. So there's no need teaching those triple bottom, double bottom. We can just know it for just knowing sake. So this now we have to come down bit by bit. Abi? Right? Comes to the zone, right? Come again, Abi? Until it breaks the recent lower high. Don't enter. Wait till it changes first. So look now. Since it's now in the zone, it will be forming to go back. Abi? So you wait till it breaks this point. Once it breaks, either then you now mark it like this. You mark it POI 1, Abi? You mark this on 2, you drag it to POI what 2, drag it on POI what 3. So either you wait for it to come to this POI 1 and enter, or you wait for it to go to POI 2, enter, or POI 3 and what? Enter. So me now, I can say for this setup, I'm risking $30 for this setup now. Then we'll now split it into 3 places. 10, 10, 10. See now, so in case this don't fuck up, I still get cash to enter for a year. I still get cash to enter for a year. See how so I will split the cash into the number of POIs. 1, 2, 3. Because if you don't start like that now, you will fear. Let's say you enter in a car and it take you. You're going to fear to enter again. And once you refuse to enter again, you're going to really play out. You say, hey, let me enter. That's what you need to split. You say, you know the fear. You say, okay, now well, if you collect me here, I will enter again for here. If you collect me, I will enter for here again. That's how you tell me. If you collect me, I will enter again. If you collect me, I will enter again until it nullifies this pattern or this setup, because they will call it this thing setup. All this is a setup. So PI 1, PI 1 to PI 3, you now enter after the formation of what? A bullish what? Candle in either PI 1 or PI 2 or PI 3. You buy it, you hold it, bam, you buy the go, previous high. Imbalance, Abi? MGG. Have you done it? 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 No, you've not. This one. Higher time frame, lower time frame. You've done it too, right? Okay. You've done this one, right? Let me clean this one. So 70 for the bearish too. This uptrend, Abi. This uptrend, Abi. This what up trend, right? 70 for the downtrend too. So let me just draw it fast. Everything is same thing. Same thing for downtrend. So like this. Okay? Imbalance. So you wait for it to what? Go up. Okay? Lower high, lower low, lower high. So that's how we do for all of them. Since you've gotten the mechanisms now, let me just draw them fast like that. Sure? It's same mechanism. or same analogy. Then once it comes to your zone, your imbalance zone, the next thing is you go to your what? Your lower time frame. Sure? Sure? Then in your lower time frame, it starts forming small bullish. This is the zone. No? This is the zone. Sure? Then you wait for it to break this recent lower higher low, higher low, higher high, right? Sure? Yes. Sure? Higher high, tough. Transparency sake, let me just do everything so that everybody will understand. So you have to wait for it to break this point. It's very important. Breaks like this. The year automatically turns to PI1. Sure? PI1. Then this higher high drags it to like this. It comes to PI2. Drags on the PI what? 3. So either you wait for market to touch your PI1 before it comes down, or touch your PI2 before it comes down, or it touches your PI3 before it what? Comes down. Anyone you choose them and hold them. If you want to choose the 3 points, you split your risk across the 3. You get? Like me now, say I do my own now. Let me tell you guys, do I do my own now? This PI2, I will ignore PI1. Then PI2, I will use the risk for PI3. The risk was supposed to use for PI1. I will use them for 2 times. For 2 times. Risk management, you cry. So that's it. Imbalance zone. Imbalance. Sure? Lower high, lower low, lower high, lower low. Yeah, Jojo, fast. Lower, low. Sure? And now, if it forms now, you want to your what? Your lower high, good. Until it breaks this previous lower low. Once it breaks it, it means the trend is continuing. The downtrend is still what? Continuing. So once it breaks it, it means the trend is still continuing. Meaning you have to wait for the next impulsive move to enter again. Do you understand? Because it must definitely what? Retrace. Like, I mean, I'm waiting for gold to retrace. Gold has gone high too much. Because of bad policy by Trump. No. Since COVID policy now, the dollar is what? Is weakening a bit. So now investors now go have to carry their money from the dollar, go put for more stable or higher rating currency. And a gold now be the only good and what? Bitcoin. You don't put that for the Japanese yen, because why? China and US, they're having what? Issues. The two biggest economy, they are fighting. So where you have an investor, where you carry your cash go? Can't go another with the higher, with the stronger B. That's why gold pop where? Can't go gold, can't go Bitcoin too. You get? Until the dollar will now show sign of strength, then investor will come back and put their money in what? In dollars. So let's go to what? Other plot, right? Now be fast now. I will just draw it and do it like that. So I'm giving you guys the template. Do you get the template? Like this now. Before it go easy you faster. Like you grab it faster than someone that like that. You grab it faster. Because I've given you the template direct. You don't need to go do research or they go crack your brain. For that block, simple too. Abi? Sure? Abi? Tell me. But that block is what? is the last bearish candle is the last bearish candle that starts the bullish movement that broke market structure. Sure? Abi? It's normally at this point. Sure? It's normally at this point. At this point here. And then the day where sure? Is the for an uptrend because we have no way if you have not launched other blocks, go and watch the video. Go and watch the video on what other words block. That's your assignment. Yeah. So if you are using other block, it means you have to wait for market to come to the what the other block before it was goes up, right? So yes, other block, right? Right? So you too now. Lower time frame, abi? Okay. These are the templates you will use. I've given you guys the templates. The template you will use. This is the zone, right? Right? So you start coming down like this. You start coming down like this. In the lower time frame. You see it now. So you wait for it to break the recent lower high. Abi? The lower high, abi? Good. It has broken it now, abi? Sure? Since it has broken it, automatically this lower high turns your what? Your POI what? Your POI 1. Dragon POI 1. Sure? This one 2. POI 2. POI 3. So market can come here and buy. Okay? So once it comes to that zone, you wait for a bullish candlestick what pattern, either engulfing bar, bullish engulfing bar, or pin bar. But what matters is that it comes to that zone. That's the Matthias. That's what matters. It can come here and buy, or it comes here and buy. It comes here and what? Buy. So you choose the POI you'll be what using. If you want to use the POI, if you want to use the 3 POIs, spread the risk across the 3 POIs. That's it. Let's go. Aya, Ayabi, Aya. So you buy. But if it starts buying from here, you can lock some of your profits because if it gets to this point first, they'll give you good profit first. Even if it comes to this point, let's say it starts buying now and comes to this point, just your risk management. If it gives you, I'll put it down. There is 1:1, there is 1:2, there is 1:3. You can say my own risk, my own take profit is 1:2. If my $10 give me $20, I'm out. If my $10 give me $30, I'm out. Because before it will come to this higher time frames, it will take time. It take time. So it means that if you start seeing some profit here, good profit here like this, and you can exit too. Let's say you risk 10 now, and 10 is giving you $30. That is a good one. You can see exit. Because for it will reach this point, it will still be dancing too. It takes some days, good. Like me now, 1:3, 1:5. Or you get 2 accounts. One account for long-term trade, right? Second one for waiting for short-term trade. I mean, share that block, right? OB. Share downtrend. This for uptrend though. Share this for uptrend, abi? This for uptrend. Let's go to downtrend. Let me be fast a bit. Down trend. Let's go. Are you there with me? Let's go. Right? Sure? Lower high, lower low. Is what? Other what? Block, right? Other block. Sure? So it means you have to wait for it to what? Retrace back to the other block before you what? You enter your cell and you what? Come down, right? So once it gets to your other block, you now move to your what? Lower time frame. Let's go. Are we there? Are you guys getting it? Is it interesting? Talk to me, oh, if you lie. Your OB. Abi? OB, right? Your bullish OB. Sure? You can write. I mean, your bearish OB. Sure? Your bearish. Your bearish. You can write it. You can write it. You cannot write it. You may write it. You may not write it. Any one. Sure? So, in the lower time frame, it will start going up bit by bit, bit by bit, bit by bit. I mean, by forming lower high, lower low, a little uptrend, characteristics, right? Lower high, I mean, higher high, higher low, like that. Wow. Once it gets to the zone, you have to wait for it to what? Change trend here. So that it will be in synchrony with the what? Down trend, right? So look me up. The recent lower IB, sorry, higher what? Higher what? God bless you. Higher low. Higher what? And the recent higher low, the recent one. Sure? You wait for market to break the recent higher low. Can you see it? Can you see it? So once it breaks it, automatically this your recent higher low turns to your what? POI 1. Then this higher here turns to your what? Because now this point now every day happen this point, so this point is very, very powerful. These recent ones. So POI to the last one. POI. This is a straight line, no? Do you get? So it's either market comes there and sell, or it comes here and sell, or it comes here and what? Sell. So you say after the formation of what? A bearish candlestick pattern here, or here, or here. Orere. Let's go. Lower. Alright. Lower. Yes, your lower, low, right? So here now we're not into your new lower high.